Hello and welcome back to another video by Hola Prime Academy. I am Christopher Lewis. I'm your host and head FX trainer here at Hola Prime with 15 years of experience in the markets. In this video, I'll discuss market sentiment and specifically retail trader sentiment. The reason why retail trader sentiment matters is because historically retail traders have a horrible trade record when it comes to trend analysis. While the sentiment of retail traders can match up with the reality for certain times, the reality is that over the longer term, they tend to lose money about 90% of the time over the life of their accounts. With that being said, a few years ago, people started paying attention to the order books at various brokers and tried to discern whether or not they could come up with an indicator that might give you an idea as to what the retail trader is thinking, and therefore maybe you can trade in the opposite direction. In this video, I'll explore this, but the 30,000 foot overview of this is going to be when traders get extraordinarily bullish of a market, you need to be a bit cautious. When they get overly fearful of a market, you need to get a bit curious and perhaps thinking about buying it. It's not the perfect timing tool, but typically you can see something like this and you can do technical analysis as well as other fundamental analysis and tie it all together. So for example, if traders are extraordinarily bearish on gold in the retail sector, there's a really good chance that it'll go higher over the long term. It doesn't have to, but if you can find that and several other reasons, typically what happens is the retail trader does something like shorts the market because it's gone too far, which is not a reason. And then when the institutions come in and start buying gold, retail traders have to close out their positions, shorting it, and then buying back that position. And that puts more upward pressure on the market overall. So with that, let's take a look at a sentiment indicator by Oanda, a large CFD broker, and take a look at some charts and see what we can glean from this. Okay, so I am on the Oanda website, and Oanda has the labs area. You can look at the indication of traders, and essentially what this means is that the traders who trade at Oanda, and it is a massive company, this is how they're positioned. So for example, the US dollar against the Swiss franc net long at 88%. That can be a contra indicator that we are about to see the market fall. We'll have to wait and see. Sometimes they do get it right, but it's just another step along the way. What's interesting though is you start to get into other pairs like the pound yen at the moment is basically dead even right along with the euro dollar. When you look at the euro dollar during current trading, for example, I'll go ahead and put this up. You can see that the traders are basically flat right now, trying to determine whether or not it's going to go somewhere. But you'll notice that the market had been falling. So at least half of them are losing money at the moment. Let's go ahead and go into something like gold. So gold, we have 63% short, 37% long. Let's go ahead and take a look at gold. You can see what's going on right now. We did get a slight pullback, but notice 63% are short of this market. And I can tell you from off the top of my head over the last couple of months, it's been that way the whole time. Sometimes it's been like 90%. So during this move, you look at this and you see something along the lines of, there's obvious support there. Retail traders are, struggling to get on the right side of the trade yet again. You can zoom in a little bit and you can look at this through the prism of a market that should continue to go higher. The thing about trends is they do last much longer than most people realize they can, especially retail traders. They're always looking to pick the top of the market or the bottom. So this is interesting. NASDAQ 100, 71% bearish. Let's see. NDX, NASDAQ 100 index, and you can see what's going on. As usual, the retail traders on the wrong side of the trade, and the market's just going straight up in the air against them. It should be noted that this does update, I believe, every 15, 20 minutes, something like that. So it's not to the tick and it's not to the minute, but it's a pretty good idea. Dollar Swiss, this is one that I'm interested in because only 12% are net short and 88% are net long. Let's see what's going on here. You can see that we are pulling back. However, you could make a technical analysis argument that, hey, we did break above significant resistance, so they're not necessarily unrealistic as to why they look at it that way. But when you get extreme swings like that, that's generally a sign that you're running into trouble. And that's exactly what we're seeing during this session. Let's go ahead and take a look at some other markets. Let's take a look at Japan 225. So that's the Nikkei 225. Go ahead and get rid of this first. You'll notice that 74% of traders are negative on this market. You can see what's happened. We sold off a little bit during the day, but objectively looking at the chart, looks like we're doing everything we can to break above this area right around 39,750 or so. And if we do, what will happen is we'll race higher. And the reason being, all of those retail short positions, they got to buy them back. So it only adds more fuel to the fire. So that's a way that you can definitely use this. I find this to be an excellent indicator on top of my technical analysis. So going back to the Nikkei 225, for example, I might wait for a breakout knowing, and in this case, we're close enough to 40,000. I might even wait to right about 40,000. And if we can break that, I would assume that at that point in time, everybody would be in trouble that was short of the market, and it will cause more momentum. The thing about trading is typically you're looking to go in the direction against the people who are trapped because they have to push the market in the direction for you, or they blow up their accounts. So ultimately, I do think this is a situation, this is kind of like a classic setup where you have a heavily shorted market, the price is doing the other thing. So that tells me the institutions are very interested in the Nikkei. Now, in this case, the Japanese yen, and perhaps I'll do a video on this, as it shrinks, it helps the Nikkei 225. Why? Because a cheaper yen means that exports for Americans or whoever to buy, Europeans to buy Sony or Mitsubishi or other Japanese goods suddenly become cheaper. So the Nikkei 225 actually likes a cheaper yen, all things being equal. It's an export country. So we have that. We have the market sentiment, which is absolutely ridiculously in the other direction, 74%. We've got this potential setup. And let's see. Dollar yen, although it did pull back just a little bit during the trading session, it's threatening a breakout as well. So it all ties together. You have a decent setup there. Remember, it's not only Oanda, it's several other brokers, but that just happens to be one of the more frequently updated ones and a particular favorite of mine. You are using retail sentiment as a tool to set up the trade, it's not the only reason, but it does give you yet another reason why the market should move in your favor. Remember, there are institutional traders out there that will use this information. Again, it's just a tool in their toolbox, but you're better off betting against those who typically don't fare well.